Welcome back to China Price Watch. In today's Money Matters, we're talking about a challenge in milk formula companies. One of the largest manufacturers of foreign milk powder in New Zealand was approved by the Chinese government. But not all of them were. This puts those approved in a much better position. When this foreign company was approved by the Chinese government, Chinese companies started to look at working with this foreign company. This meant that more Chinese companies were choosing to recreate their companies abroad. So they were still Chinese owned, but kept most of their operations abroad. For instance, a Chinese company called New Re's contracted manufacturers called the Sutton Group. Recently it was announced through its official website that its brand had been approved by the Chinese government. They are hoping this will help them win more market share. A few Chinese analysts pointed out the new rule shows its flaws. It merely has limits on foreign manufacturers of infant formula, but doesn't have an effect on foreign infant formula brands. The increasing number of foreign infant formula brands will likely be a big threat to Chinese infant formula producers. As Chinese consumers trust foreign products more than Chinese ones, this move should help sales. Data showed that in just 2013, the OEM infant formula product made up 60% of market share in the Chinese market. They were worth about $8 billion US. The portion of OEM products expected to rise in the near future. Many Chinese analysts are worried that it will lead to a price hike for foreign products, as well as a new round of price wars among domestic infant formula producers in China. An insider exposed the cost of OEM products exported to China are usually 100 yuan, or about $16 US for a can, but they're sold for at least $60 US in the market. Those OEM brands could get a huge profit from this. Biostime Company, a Chinese producer, has contracted manufacturers in France. Its annual gross profit margin reached 70%. In addition to these OEM products, authentic foreign products are also raising their retail prices in China. Companies in New Zealand said the cost of inspections and tariffs will make up 30% of their total export costs. After the new rule is implemented, the foreign companies have to pay more for inspections. The fees can reach over $160,000 US for the whole year. Analysts said that it's likely they'll raise their prices to cover the extra expenses. The price of imported infant formula products could increase by 10%. Now, imported infant formula takes up a large portion of the market share in China. Chinese media released that after the baby killing scandal, the portion of imported infant formula rose. It went from 30% to 85% of the Chinese market. New Zealand is one of the largest formula exporters to China. It exported about 1.7 million tons of infant formula to other countries in 2013. 755,000 tons of infant formula went to China. The new rules on imported infant formula could shake up the market a bit, but it's not really clear how this law is supposed to be effective or good for food quality in any way. Don't go away, because up next in our question of the day, Beijingers' thoughts on challenges to the milk formula companies. Stay tuned.